Welcome back to Force Education. This is Ed. Today I'm going to be talking about Gevo. It's been a while since I talked about this one, so I'm going to go briefly through technical analysis to give you a bit of a perspective into what the psychology of the traders trading it are feeling like. Now, what I'm going to go through here is after technical analysis, DD, presentations, anything I could find. This is a standalone video and hopefully will give you perspective. If you would like to skip towards the DD part, you can go ahead. Should be somewhere around the third into the video. Let's jump right into it. So on a 1 week perspective, what we get to see is the chart looks a little bit rough. MACD looks like it attempted a negative reversal, got a bullish kicker on 1 week, and then is bouncing back. ADX doesn't show us much, and willing %R puts it at overbought. Moving averages in the chart overall looks completely ugly and uncomprehendable. So the next thing you're looking at is an MACD that has gone positive, looks really nice. Moving averages are extremely bullish and even going more bullish as we go on. The 50 SMA is about to cross a 200 SMA in what's called a golden cross, which is a really bullish sign. Now, the next thing we're looking at is an ADX that is moving here and shows in a very strong positive trend. Willing %R still overbought and momentum still really strong. Now, what we've seen here is a bullish kicker. It's still quite, I would say, on neutral level, but it's a little bit of concerning that it's seen this pullback. But again, if it's actually going on an uptrend and not a spike, a pullback is healthy. Next thing we're moving on is the moving average bands. For the sake of the argument, moving average band is 116 at the top, in the middle 105, and in the bottom 95 cents. The stochastic fast and stochastic slow. The fast one shows in, hey, there could be another leg, but be careful and start securing in profits. The slow shows, hey, there's another leg for this one, hold on tight, but you know, you might see a bit of a pullback. That's what the %K slow is showing. Now, if we were to look into historical kind of moves similar to this one, perhaps we're talking about something similar to this here, where I've seen another push and then a decline. Or we could be even talking about something where it is, well, nothing is shown here, but if we pull back somewhere around here, could be seeing something like this or this. Well, not like this because this one is a hanging one. So, I mean, there has been trends before similar to this one from the previous chart, but again, every single chart is different for this one. Try to go back to history and try to make sense of it, but a lot of the time, that's not the way to go. I can go on Fibonacci retracements and go for all the way 616, all the way down, or hey, all the way to 2020 to 425. So what I'm going to do, I'm going to do 420, well, I'm going to do 360 down to here. Fibonacci support 122, resistance 167 and 204. Just to kind of cover that itch. And then what we're going to do quickly, move on to a 1 day rather than a 1 week perspective and pull back a little bit further. And we're going to cover supports and resistances. You can already see that I have an alert or an alarm at the 150 mark as a resistance, because that's where I would like to see it above before getting in. 132 is current support. Below there we're looking down to 122. Let me zoom in. There we go. Then below there we're looking at 117, 117, 4 to 101, and then 96 cents to 87, 87 to 81, and all the way down to 76. Our resistances, we're looking up to 139. From 139 we're looking to 150. From 150 we're looking all the way to 159, and from 159 we'll have to go back to history. So from 159 we're looking at 168. From 168 we're looking up to 197. From 197 we're looking 206, from 206 222, and 222 233. All right, that kind of covers a lot of it. Now towards the nice stuff, well, the exciting stuff here for me. News, digging into SEC filings and trying to find a bit of hidden information there for the next catalysts. So coming up, institutional buyers really disappointed on this. Where is all the institutional buyers? No 13F and fund filings, at least in the recent times. Only 13Gs, which is passive investment, but no institutional purchases. So that is a little bit weird, especially for a company like this. And insiders are not buying. The last time they bought, I would say, was all the way back to 191 and 315. So maybe they're back holding. I don't know. Next on is their third quarter. So I'm going to go towards the business highlights because, yay, we have a lot to cover for this one. In August 2020, they entered the $1.5 billion revenue across the life of contracts. This was the reason why I jumped in this in the first place. And in August 2020, Gevo and Praj Industry Limited entered into a master framework agreement to collaborate on providing renewable jet fuel and premium gasoline in India in neighboring countries, which agreement replaces the construction licenses agreement entered in April 2019. In August 2020, they completed a registered direct offering at $130 per share. In July 2020, $2 million in aggregate principal amounts of Gevo 12% convertible senior secured notes due 2020-21 were converted into 4.2 million shares, including $0.3 million of whole market interest. In July 2020, they're really going back. They had a total proceeds of $16.1 million of warrants to buying in at 60 cents per share, and that resulted into $16.4 million profit or income, cash flow, whatever you want to call it. Due to its strong balance sheet, available cash, Gevo expects that on December 31st, 2020, it will pay off its entire outstanding balance of $12.7 million of 2020-21 notes. Upon repayment, the outstanding debt represents by the 2020-21 notes. Gevo will have no outstanding debt by all its assets. That's really bullish over there. In late October, Gevo approximately had 50,000 gallons of renewable isobutanol at its production facility in MN. Once, I think that's Minnesota, I don't know. Once the renewable isobutanol has been produced, Gevo will ship out isobutanol to the Southampton facility for use production for renewable hydrocarbons during the first quarter of 2021. Gevo plans to produce additional 50,000 gallons of renewable isobutanol during the second quarter of 2021. So interesting things in there. By the way, I don't know what the 50 abbreviations for the states are because I'm Canadian. So before you start typing on there and start telling me, hey, Ed, you should know the states better. Well, I'm not from the states. Third quarter financial highlights from Canada, by the way. Anyway, ended the quarter with cash and cash equivalent of around $80.6 million compared to $6.3 off the end of quarter 2 2020. Revenues totaled $0.2 million for the quarter compared to $6.1 million quarter 3 2019. Something very interesting going on there. Hydrocarbons revenue decreased to $0.1 million compared to $0.6 million. Loss from operations is $6.1 compared to $8 million, and the EBITDA loss, or EPTDA, 4.0 million compared to 5.8. Net loss per share is 0.09 compared to 0.66. Of course, they have a lot more shares now. So if we were to dive a little bit quickly through the assets, you get to see that the assets increased. Total assets around 153 million. This is in thousands, and then total liabilities has been around the same. Revenues here, what we're seeing is total revenues has decreased substantially, mainly in ethanol sales and related production sales. And hydrocarbon revenue has decreased as well. I'm losing my voice here by the day, but I'm still dedicated to making you videos. 6.8 million loss compared to 8.6 million loss. So this kind of really annoys me when it comes in towards the revenues, what's going on there, and I hope to see a lot better balance sheet in the future. Nonetheless, we'll move forward. Sweden and Norway target increase in use of sustainable aviation fuel, which Gevo puts it in the perfect position for this if they capitalize on it. I believe before they even mentioned this news, I was talking about it in my news section for Gevo. So that's probably not going to come in anytime this year, by the end of the year, but maybe 2021, we can get to hear a bit more about that one. Business updates, I mean, they basically reiterated that in the quarter, so I'm not going to go through there. So what we're going to do quickly is move on forward towards their compliance. Yes, they met the compliance of $1 minimum for the 10 consecutive days, so all cool. They're compliant and all. You have, don't you forget the current their peak value analysis. They yielded that they have a valuation of around 420 million for the IP. Now, how do you actually look into what's the current, let's say, market cap? So what you do is you go to Yahoo Finance or FinViz or whatever, right? Let's go to Gevo. and I'm having problems. There we go, Gevo. You're gonna go towards, it should be over here, 161.498. You can do this for any company. I really like these ones because you can go on towards statistics, charts, analysis, etc. It doesn't give you everything, just gives you a little bit off stated details. And you get to see on the market cap, we're looking at 161.498. Their evaluation is around 3 times more than that, 2.5 to 3 times more than that. And so you can guess to see that their current price around 135, it's warranted to go up to, let's say, $3. So there's that, if you think about it. I can do the exact math, but hey, you can do the math. I'll just take the price to market cap divided by take the price divided by the market cap multiplied by 412. You get the current evaluation price per share. Anyway, on August 25th, basically they did have an offering a while ago, so around 130 per share for the warrants. So currently 135. Another thing here was 130 for the shares. Next thing is this news here coming in toward. This was all the way back in August. And this, we already kind of priced in that, which was basically entered into a renewable hydrocarbon purchases agreement basically for 10 years. So we already covered this one. So mainly for producing hydrocarbon products contemplated by the agreement. And basically the other thing is that the meet requirement set forth around December 31st. So we have another catalyst here when it comes in towards Trafigura, the design capabilities that needs to be provided. Again, losing my voice, so I really apologize on that. $1.5 billion in long-term revenue contract signing to Virgo. So basically, their deadline for this is to supply the designs by December 31st of 2020. I'm pretty sure this is somewhat related as well to the $1.5 billion, but it got overshadowed because it was at the same time. The aviation fuel will basically starting in 2023 to be kind of delivered when we're talking about the low carbon premium gasoline with a smaller portion volume for sustainable aviation. So there's that to consider. And then we're going to move on towards their presentation. So the presentation here, October 2020, I already kind of covered what biofuels are in my previous video, but because this is a step-alone video, let's take a quick look into their customers or their potential customers. UPS, KLM, Amazon, BP, CocoPhillips, United Airlines, Shell, Delta, and I could have sworn that was Shell, but Total. It wasn't Shell, sorry. They all look the same at some point. Fossil-based, first-generated, and Gevo-generated biofuel. So first-generated bio-based, it's basically not fully green, but the second-generated biofuel, where they take that, they even process it further into having a full-on cycle, as I'll show you in a second, makes it more sustainable. And so the target market basically for products is jet fuels, gasoline, isooctane, oxygenated blend stock for gasoline, which is isobutanol, and diesel. And the big part of it is that you have carbon dioxide and water, you get carbohydrates, you got proprietary yeast, and then you get isobutanol, and then from there you can get isooctane, which is gasoline or jet fuels. And the next thing is the product works, and they have a bunch of different customers all across the world. I really kind of covered all those ones before. Well, not all those ones, some of these ones. And you're looking either into like Lufthansa Airlines, Etihad, Kinder Morgan, Korean Air, Atlas Air, United. You got also for Farnborough Airport, you're looking into World Fuel, Cirrus Aircraft, Cessna, Australia, Virgin Airlines, looking at Queensland Government, Satlex, and as well in all around the world. So there's part of Bombardier as well as a part of it. Next, renewable gasoline, isooctane, and performance fuels. Moving on, basically some of the cycle to try to explain it better, and then we're gonna move where it's your customer and partnership agreements. Again, listed on there. Some of the things you haven't seen is FedEx, for instance. It's added on here, and their market traction is $1.5 billion take or pay offtake, which is closed. $600 million take or pay negotiating and other offtake. So that's exciting. As well as the current and expanded operations, kind of gone through this already. The current is for 265,000 gallons fermenters, one purpose-built isobutanol. They're going to expand it to 500,000 for the original fermenters. This distillation building number 1, that's number 2 on here on 2 building. And then number 3 is the third one. And then they're going to have 2 500,000 gallons fermenters, additional to the expanded one. IBA beer well, combined heat and power CHP building, propagation building, 12 mmGPY hydrocarbon plant, and additional 250,000 gallons of product storage. You can get to see the currents over here. There's no point of mentioning it. Once again, we're looking into what's expansion, so we get to see the kind of expansions or the kind of range that they're going for. Next thing is plotting the future U.S. biofuel industry that seeks federal clean fuel program from Biden. This was mentioned by the National Post, quoted by Reuters. So I'll take this one as somewhat of a credible news source. America's biggest biofuel companies plan to ask the President-elect Joe Biden to impose a nationwide standard to reduce carbon emissions from transport fuels, according to 5 sources familiar with the matter, and hope to preserve a role for products like ethanol amid the fight to climate change. The plan pushed for biofuel industry reflects its increasing concern about one future prepares Biden measures to slash emissions that could upend traditional energy markets, as well as federal regulations, as it underpinned growth for biofuel market for more than a decade. The renewable fuel standards nears expiry in its form. Officials from biofuel companies and trade groups like POET, LLC, Pacific Ethanol, and the Renewable Fuels Association teamed up representatives from agricultural, autos, and electrical industries to draft letters to Biden urging a nationwide clean fuel standards. Said it was not clear which groups have signed a final letter. Such a rule would require reduction in the amount of greenhouse gas emissions emitted through the production, transport, and combustion of fuel, but would also allow for flexibility in how these goals are achieved, including through the purchase of carbon credit generated by the company like electrical vehicle producers. So that kind of gives you a bit of a sense that the next administration is also going to be looking for renewable energy, and biofuel might be able to be part of that, as well as it's kind of a traditional part. So you can consider that coming in January, at the end of January, you might see another push, but at the current level, Ed, what do you think? A little bit risky, okay? And I would like to see it stabilize above 150. If it does stabilize above 150 and stays above there, then hey, I'm all for it. But the biggest part of this that scares me the most is it's currently running with that kind of sector. It's not running on its own. It's running due to sector. WWR is one of them, for instance, that is seeing another run. Gevo is running. This was previously, I think I mentioned it all the way back in like November 3rd, around this region here. Look at that, you'd be up 35%. But big thing is from now until January, that's 2 months before Biden takes office. And so you need to consider, what's going to happen between now and 2 months. I think this is a solid company to invest in, but you got to be very careful, and you want it to stabilize above 150, as that is a really important mark. Now, when you're looking into the traditional graph, it's a little bit scary. It's very scary. So you need to be very careful with your investment and make sure to have a strict cutoff limit. Now, if this is actually an uptrend, see, remember, all long-term stocks have an uptrend. So high highs and high lows. That's if you're taking an investment. If you're trading, scalp, and scalp on a green candle. Don't scalp on a red candle. You don't want to catch up in a falling knife. Because what happened here was increase to 144 and then start to decrease, right? And then a bit bounce back. You want to make sure it bounces back another further on and increases that green candle and goes to uptrend and not fall down, and then you basically catch a falling knife. So the way you're going to trade this is by looking at volume, inflow more than outflow, and a green candle. And I would say trade it unless you start seeing a strong uptrend. See, this one was an outtrend. This was a downtrend. This was an uptrend, and then it got to accumulation and drop down, and then right now what we're getting is either a double top to break that kind of area. So you can say, okay, it broke it down to 133, but 150 is a strong mark. If it does break there, it could actually see 250. So that's my view on it. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day.